right? Some,
It is. And by the way, if I can interrupt you,
sure.
and I don't want to set firecrackers off because I know this is a hot topic with you, but that's where this whole NAV erosion BS comes from, is out of the US marketplace, right? Because when you have your yield max, and not that yield max is bad, but people just don't understand what yield max is,
Yeah,
right?
yeah. The NAV
It's
erosion
yeah,
typically comes out of funds that have the higher yields, right? You're not going to see a
that's right.
NAV
That's
erosion
right. But
video on a,
it's not NAV erosion though. NAV erosion, there's two reasons people use the term NAV erosion. Number one, because they can't do math, and number two, it's clickbait for YouTubers,
yeah,
right?
it's great. The only winners are the guys with the thumbnails, and there's one guy that always puts no NAV erosion in yellow, and good for him for being smart enough to, and people click on it because they think it's
Yeah.
true. They think they could avoid NAV erosion, and I did many videos on this. I have another one coming up. I talked about an example in a live stream, but I have a video plan called NAV erosion myth debunked with grade 2 math. So hopefully
Yes.
you'll like that one. Um, but
Well,
yeah,
I look at that. My buddy of mine asked me about NAV erosion, right? And I said, okay, if you gave me $100
yeah,
and a month from now, I give you $150 back and tell you you can reinvest as much of it as you want.
exactly.
That's what would you give me? You might give me 130, you might give me 100, you might give me 150 and bet all of it back. But that's NAV erosion, right?
Yeah, yeah. The
It's
the
not a bad investment if you understand that you're really making $50 a month.
yeah.
Don't go
It,
spend 150.
yeah, another example I could give, and this is was my idea behind the video. Let's say you have an S&P 500 cover call ETF. Let's say SPY from Neos. I use that example because it's always about 12% yield, and the let's just say the average annual return of the S&P is close to 12. It's a little bit higher in the past. The further we go, it's a bit lower, 10. Now it's been 14. Let's just say 12. Let's just say the average annual return of the S&P 500 is about 12% annual. SPY is 12% yield. The stock chart is going to look like a dead person. It's going to be flat,
Right.
right? Because they're giving out that 12% in yield. But if you look at the stock, if you're just looking at the stock chart, someone could say, well, I'm not making any money with this stock. That's red flag number one, that looking at stock charts to evaluate an investment is stupid,
Yeah.
right? You have to look at how much it gave out. If there's a yield, if a stock has no dividend, has no yield, then you can look at the stock chart all you want because that's all there is. It's just the capital. That's it. But if there's a yield, you cannot look at the stock chart. So stay with me here. SPY, 12% yield, 12% annual return. Let's say it's the exact same fund, the exact same return, the exact same asset, the same management, everything's the same. There's SPY 2.
Mhm.
Same thing, 24% yield. The stock chart's going to look
Right.
down 12%, right?
Good.
Because now they're giving you double the income that comes out of the NAV and the stock price. So you'll see the stock chart. Now you have SPY 3 that gives you 36% yield, and you have SPY 4 that gives you 48% yield. The stock
Right.
charts are all going to look very different. One flat, one down even more, one down even more. All of them have the same exact total return, correct?
Exactly.
So how if all four of them have the exact same return, which means if you put 10 grand in each of them at the end of the year, you're having the same return. Why does SPY 2 and 3 and 4 and 5 and whatever get the tag NAV erosion and the first one doesn't? Or if we have a SPY point 0.5 and it's 6% yield, well then
Right.
the stock price would be plus 6%. So it doesn't make, NAV erosion is a myth. It doesn't make sense. So if something gives you 60% yield, but the return is more or less 15, well, if
Yeah.
you don't want your capital to go down over time, you want your capital to be more or less stable, you have to reinvest, or you should reinvest the appropriate amount of money, right? In SPY 2, you need to reinvest. If you want your capital to remain, if you want to invest $1 million, you want to live off the $1 million forever, but you don't want your $1 million to move, SPY is great, right?
Yeah,
Right? Flat stock price.
absolutely.
But you could still do it with SPY too, but you got to reinvest half of your income.
Right.
If you, right? SPY 3, you got to,
Which, by the way, is the same reason why I love the Canadian ETFs, right? The Canadian covered calls, that's what they do. You just had, I think his name was Eric from 9 Points, right? The really smiley guy. Um, he's just like Michael Kovacs, right? Like we don't want to degrade our NAV. We'll
yeah,
lower our distribution. As an investor, that's exactly what I want to hear, right?
exactly.
I just want to know, yeah, NAV erosion is BS, but what you got to do is you just got to align yourself with companies like 9 Points Harvest. Well, all the Canadian ones do it, right?
Most of all the Canadians won't do it. This
Most
is
of
why I
them do
say
that.
you want to put in the million and live off the million, but you want to keep that million intact. You better choose funds that are
Right,
appropriate for that. And the general rule of thumb that I give is the yield needs to be more or less similar to the return.
right,
Similar to the return, right? There's leverage, so maybe that's why that magical range, that's why USCL and QQCL and HYLD and HDIV, they all have, 11 to 15% range. That's a good range because that's the return the underlying assets are giving. So those funds are good if you have that objective.
right,
Personally, I would always go with the SPY 2 or SPY 3, get more income, and reinvest what I want. I want the flexibility. I would rather have more income and have the ability to decide for myself, oh, this month I'm going to reinvest half. This month I'm going to reinvest all of it. I'd rather have the flexibility, but if you don't want to put any work or time or effort,
yeah.
you
You
should
know,
go with like you said, and most of the Canadian fund managers, they do that strategy. They give out an appropriate yield where more or less you could live off of it and your capital should remain intact over time. This is a
right, and
long-term
that's
thing, right?
yeah. And what you said right there. Well, I was going to mention one thing to you, but one of the things I love about PII, you won't find me in a mall shop. I hate shopping, but with PII, you know what I love? Every month, I
Shopping.
don't have my stuff set up on drip, right? But every month when I get my distributions, you know what I do? I get to go shopping
Yeah,
and I see what's on sale, right?
from the comfort of your own home too, by the way.
From the comfort of my own home. But I mean, isn't it pretty cool when MST, I got really lucky. Way back on the dip in April,
Yeah,
I had a bunch of money come in, and it just so happened that it was right at the bottom, and I bought a ton of MST. That never happens, right? But that's what I think is fun about PII, right? Because now I look and I look at all my funds and I'm like, whoa, this one's really down right now. Perfect. I'll overextend on that one past the percentages that I wanted, right? So
yeah. No, I totally understand, and that's why I don't have the drip either. I like the flexibility
yeah, me too.
of reinvesting into whatever I want, how much I want. This
Right,
is, it's a question I get all the time. Well, how much do I need? How much should I reinvest? There is no right or right answer. You want a general
right.
rule of thumb, take what you need, reinvest the rest. The more you reinvest, the more money you'll have next month. It's very, very, very simple. It
Yeah,
depends on your lifestyle, depends on where you're at in your life. Maybe one month you want to splurge, you spend it all. No problem.
yeah,
That's your privilege as a PII investor. Growth investors don't have that privilege. They have to sell units. What if the
that's right.
market is down? How much do I sell?
I couldn't sleep selling units. Like
Yeah,
that would bother me
it's a
a
big
lot.
problem of
That would
the
bother me
growth
a lot,
style.
right?
Yeah, yeah.
And
I'd rather
I
get
just know me. That's not everybody, but to me, that would really,
it,
really bother me.
it's not everybody. I see some people comments. You could just buy VU or VFV and sell 1% a month, and you don't need the PII. That could work too. 1% a
Sure.
month, 12% annual, more or less your capital to stay the same, but you're gonna have to sell it. You're gonna have to execute the
But your
trade.
income goes down substantially though when we're in a market downturn, though,
Exactly.
right?
In a bad market, you're still gonna have to sell, right? You're still gonna
Mhm.
have to sell, but then, oh, I don't want to sell because I'm in a bear market, and that's where that whole 4% rule that comes in, and PII is so much easier. But
which
let's
is
go through
also crap, by the way. But yeah, so
let's go through your portfolio. So
sure.
uh, I see here mostly big cap US. You have HYLD, QQCL, USCL, which, like we described, is put you to sleep, right? It's the indexes.
Yep.
Never have to manage. You have some HHIS, which I see as a
I love
concentrated.
HHIS. I mean, I love HHIS,
Tell me
right?
why. Tell me your idea behind your portfolio construction.
Okay, let's go back. Yeah. So I'm also going to break it down. If you haven't figured it out already, you got blue and pink. Blue is me, pink is my wife. I was the main income earner in our family. And one thing that I did do is one thing that I where I screwed up in hindsight is our hours, if we totaled up our RSPs or RSPs,
Yeah.
I hold probably 70% of our RSPs.
Okay.
I didn't assign enough of them to be a spousal RSP
Yeah.
because in an ideal world, you want to wind up at 50-50,
Yeah.
right?
The good point.
So
A
if
good
you're
tip.
younger and you're unbalanced, start putting all your money into a spousal RSP now. Trust me. Um, so what we did here, you'll see on the bottom, and I'll just jump down to the bottom, the 37% and the 62%.
Yeah.
Um, that's not right, actually. I'm the blue. I've got the colors reversed. I'm 37.89, and my wife holds 62% of our money. What
Okay.
we did is we set up an interspousal loan for attribution rules,
Okay.
right? And you can YouTube. I'm not going to get into that, but you can YouTube an interspousal loan attribution rules, and this way from a tax advantage standpoint, it's much better for us.
Okay.
So
And just to
that's
be
what I did.
clear, this is all your accounts. So I'm assuming this is two TFSAs, two RSPs, maybe a joint cash account or two cash accounts. I'm not sure, but this is everything combined, all your accounts combined, right?
Yeah, this is everything combined.
Okay. Talk
Yep.
to me about the holdings. Why did you decide on these holdings?
Well, so first off, I love QQQ, right? I love the Nasdaq 100. I just think that's where we're at. So that's why you're going to see QQCL at 30%, right? Basically, my whole idea here was to go 30-30-30-10, right? With MSTE.
Okay.
Then I started to get a little bit greedy and I was like, well, I like HYLD, but do I really like HYLD that much when my returns are getting what I'm seeing with MSTE? So I started dripping more into MSTE, right?
Just to
Which
be
diluted
fair,
the, the
I will have to correct you. Your yield, not the return. The return might not necessarily be higher, but the yield is way higher with an
sorry,
MSTE,
that is correct. Yes.
right? It's a very important lesson number PII lesson number one. Yield is not return. It's very
Right.
nice, but it's not return. So sorry to cut you
Right.
off there. Continue with your allocation.
Yeah. So, I mean, from an allocation perspective, what I was looking at doing was doing 30-30-30.
Yeah.
I wanted my S&P 500 to be 30%. I wanted the NASDAQ 100 to be 30%. HHIS, God, I love HHIS. It's the best of both worlds, right? It's the highest traded, shares, big companies. In my opinion, that's just low risk. They're doing covered calls. I love Harvest. I love their approach. I
Hmm.
love everything about Harvest, as a matter of fact. And a shout out to you for bringing on Michael Kovacs and doing your interviews so that we can see the guy behind the curtain, right?
Yeah, I mean,
So,
I'm open to having all of them on. I want to hear from all of them, and it's funny that you say that. I think those are probably my most important videos, and they don't get as much views as just me talking about stuff. I think
right.
that's where you're gonna get the real information, and you could see exactly who behind the curtain is. And they're all great in Canada. I mean, I've met all of them in person, on camera, off camera. I've had dinner. We're gonna be meeting with him as well at the Blossom event. But
Yeah,
yeah,
I also, by the way, Adriano, I also liked even in the 9 points one where all I'm saying is don't stop turning the heat on them, right? I love when you're asking them the difficult questions, right? Like when you asked, you didn't word it this way. This is my words, but when you asked the guy from 9 Points,
Yeah.
what are your differentiators against others in the marketplace that are already here, right? Like that was a
It's not
great question, by the way.
exactly a, I
That
mean,
was a
you have
great
to ask
question,
that
by the way. I was
question,
like, oh, I
right?
can't believe you asked him that.
No, well, that's actually, that's one, sponsored or not,
Yeah,
I don't care. I tell
yeah,
them
exactly.
these are, if you're, and I have to admit that in Canada, I've never had a fund manager refuse a question or say they don't want to talk about it. So I think these fund managers kind of get a bad rap as some evil, greedy people. That is actually not the experience I've had knowing and meeting these people and talking to them offline and online at all. It's the opposite. I've never
Greedy.
had it where they said, no, I can't talk about this. Not
I
one.
love
All of
these
them.
fund managers. They enabled me to retire 5 to 7 years earlier.
Of course. Right?
What are you talking about?
Exactly.
So, yeah, I mean, jumping back to this, yeah, MSTE, I love MSTE, right? So
So
I
that's
just
kind
have
of
to,
like your Bitcoin proxy or your Bitcoin exposure.
yeah,
You
yeah, that is what it is. That's my Bitcoin exposure, and that's my first exposure into Bitcoin, by the way, right?
don't forget strategies in the Nasdaq now.
I know, I know. Oh
And
yeah, I see what you're saying. Yeah.
it's 0.5% of the Nasdaq, and there's rumors of S&P inclusion coming as well.
Wow, isn't
But it's
that
in,
something?
yeah, and it's in HHIS as well.
Yeah, yeah,
So
yeah.
okay, so you're a US big cap tech guy, just like me, right? I could tell. So 30 S&P, 30 Nasdaq, 30 HHIS, which you said you really, really love it.
Well,
Is it?
these are my, I would call these all my, with the exception of MSTE,
Yeah.
because hey, I'm an old guy, right? And well, I'm not old, but I'm 58, and Bitcoin for me is on the outside, but I just love the yield, right? And that's my first exposure to any crypto,
Okay.
right?
Yeah.
But the others, listen, if the others got washed up and went away, the world is coming to an end. Okay.
Exactly. Yeah. It's yeah.
That's how I look at it. I look at this portfolio, with the exception of MSTE, this portfolio has got so much less risk than the crap that my advisor had me in.
These are words of wisdom, my friend. A lot of
I
people
I was
don't
in I was
realize.
in crap. Are you kidding me? Like, what was it? 5% of my portfolio lost money.
Hmm.
Like over 8 years, it didn't make a penny and it continued to lose money. They don't touch your portfolio. Oh, give me a break. Just either
Yeah.
put your money in the S&P 500 or the Nasdaq 100 and or do PII, but do something. Just save yourself
At the bare bone minimum, S&P 500, right?
at the
Bare.
bare bones minimum. But
Yeah.
myself personally, if you were to ask Tim, I would do 66-33, 66 in the Nasdaq 100. That's what I would do. Because over the last 15 years, that's a pretty good run rate,
I
right?
think I think I'm with you, and you know what? I'm starting to think about it as well. I think, and tell me what you think about this. Thanks so much for sharing your portfolio, by the way. We're not gonna say the amount, but let's just say this is a significant amount that you and your wife have been working for your whole life. Would you say
Mhm.
that's accurate? This is your all
Yeah,
in.
yeah.
This is everything.
This is the whole
This is the
this is
whole
the whole
thing.
kit and caboodle. And I'll
So you
tell you something else. Every time I look at it, I I can't stand to have any money sitting around that's not in here now.
that's just the byproduct of what PII does for you. You're gonna
Right? It's
hate
like,
hate cash leaving money around because it could be making more money. So why you know what I mean? So of
so Adriano, can I get you to pop that up? Because I would like your thoughts on one other thing on that
course.
sheet. So we moved a bunch of money over. We just ended our careers. And of course, my wife has a Lira now. I have holdings that were, my employer used Canada Life, so I'm moving those monies over. Can you go to the tab tomorrow on the bottom of the spreadsheet? So if you just zoom in on the top here, I just wanted your thoughts on this because this is what I'm in today, and I'll be moving in a bunch more money, right?
Yeah.
And I was looking at, by the way, thank you for your video on Q Day and S Day, because I can honestly say I didn't understand Q Day and S Day until you said that 100% of those are in the actual fund and only 25%, the leverage part, is what they're using to cover calls on. Did I understand that correctly?
80/20. So pretend
80/20. Yeah.
pretend
Yeah.
it's 80/20. Let's say it's 80/20 or 100 and 25, 100 versus 25. So the easiest way to think about it is 80% of the portfolio of C Day is in Canadian, the most boring blue chip Canadian dividend stocks you've ever seen in your life. 80%, no covered calls untouched. 20%, they're pretty much doing at the money daily covered calls on the S&P 500. So it holds the S&P via VU, but you're kind of giving up all the upside of that. But that's where that's where all the yield is coming from, or most of it, 3% from the dividends, 15 or so percent from
Yeah.
those zero DT calls. So this is actually a very cool and unique structure where if those Canadian dividend stocks continue to do really, really, really well, this fund should do really, really, really well, right?
Yeah.
S Day is the same thing, but on the US, right?
Yeah.
Q Day is more of I look at it more as a pure play technology play,
Yeah.
pure
I look at that
technology
in
play.
NASDAQ 100. That's how I look at it.
Yeah, you could,
Subset thereof, but
yeah,
yeah, it's
even
a
more
typical
concentrated in tech because
for
if you
sure.
really, the exposure is the XLK ETF, which if you
Mhm.
look, 50% of it is Apple, Microsoft, and Nvidia.
Right.
So you have to remember like things like Amazon and Tesla are not going to be there because they're not pure tech.
Yeah.
Even Google, I think, is not in there. So it's really like chip makers and things. I don't know. The ETF must have deemed as technology, and I think Google's not there. I could be wrong, but Broadcom, AMD, Nvidia, Apple, Microsoft is there. So yeah.
Yeah.
So you're going to introduce these as well a little bit.
Yeah. So the monies that I'm transferring in, and it's a chunk of money, but I wanted when I looked at the harvest, all the funds within HHIS, I thought, what if I did like a little mini HHIS for myself,
Yeah,
right?
it's tempting, right? Increase your yield a little bit. Yeah.
Well, it
So
is, right? And I'm looking at the Tesla, and Tesla's on sale right now. Holy cow! It's like I think it's $7 a share, or $7 or $8.
you're
It's
talking
just so
about
cheap.
these three, like you're thinking, well,
Yeah, these three.
let me put a 3% in each of these higher yielding ones that have like 40, 20, whatever it is. If you're
Yeah,
gonna ask me my opinion, I think why not? It's a small position, but I would say you should have conviction in the companies if you're doing this. If you're
yeah,
investing in a single stock, I would assume you have some sort of conviction. Now, how big the conviction is? Well, it's a 3%, 2.84% conviction.
yeah,
So it's fine. There's nothing wrong with that. Personally, I like just having the HHAS. The only single stock I have is the MSTE, but that's because I have a very strong conviction in it.
yeah, 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 yeah. I
But
was just seeing the annual yields
yeah,
there,
I
going,
mean,
oh, right. And you know what? Hey, at the end of the day, you can buy them, you can get some yield, and if you don't like them, you can always sell them, right?
exactly,
You
exactly.
know, like really Palantir, Coinbase, right? Like I don't know, Tesla.
Yeah,
I put the HBTE and the HBIX on the bottom because the other thing that I am going to do is I'm going to start dripping into those in future, right?
okay, I see what you mean. Yeah, so introduce a little bit more Bitcoin and
Yeah, a little more. Yeah, more. Listen, we're in a Bitcoin world now. Bitcoin's not going away, right? Bitcoin is very real now, right?
yeah, yeah. I mean, the more I learn about it, the more I learn the technicalities about it. I had like a Bitcoin expert on the channel recently.
Yeah, I watched him.
Quite technical, really smart guy, but I don't fully understand the technology, but it's starting to register like the terms. But overall, the more I think about the concept, the more my conviction grows. So I
Yeah,
think that's going to happen to you as well because you're a tech guy. but we'll see what
Yeah.
happens. But I have
Yep.
a question I think maybe the audience would have. Why no Canadian stocks? Why no Canadian exposure here?
I just don't see that producing the same kind of yield that the US market does.
So it's about yield for you for that.
Well, versus waving a Canadian flag, is that what you mean?
Yeah, no, I'm just curious why no Canadian exposures? Because I get that question a lot too. So
I
I'm
don't know.
curious to
You know
see
what?
what.
The US is the biggest market in the world, right? I would love to put my money into Canada, but it's my money. Call me greedy, but I feel as though here's a question for you. What is going to what would tolerate more volatility? The TSX 60 companies or the S&P 500 500 companies? The
Yeah,
500 companies are going to sustain more volatility than the TSX 60 is.
you're saying it's going to have more volatility, hence the higher
I'm
yield, the
saying
higher
it
call
can,
premiums.
if two companies, how about this? If six companies in the S&P 500 crap out, right? They
Yeah,
go to zero overnight. It's going to have far less impact than 10% of the companies in the TSX 60
yeah,
going away overnight, right?
yeah.
That's how I view it. I view it strictly from a risk. Uh, you know, I just feel I sleep better at night knowing that it's in a broader index.
Yeah. Yeah, no, I'm with you. I agree with that. The way I look at it personally is if you're gonna put all your money in covered call stuff, your return is really everything's coming from those call premiums. The US options market is simply much bigger, much better than the Canadian options market. That's another thing that I learned. Like doing
Yes.
covered calls on the Canadian stocks and the railroads and the insurance companies, it's harder to do the options.
And no, nobody's
Um,
buying them either.
it's people buy them. The
People
big,
buy them, but they're not in the volumes
not even
of
close.
the US
Yeah,
holdings.
that's number one, I would say. Why I personally, maybe, I'm not saying they're bad investments, but as a covered call income investor, this is important to think about. Your money's coming from the options. It seems to me after doing some analysis, for example, you have CNCL, TSX 60, covered
Right.
calls and 25% leverage. If you do that versus USCL versus QQCL, and you compare with the benchmarks of just XIU,
Yeah.
VFV, QQC, you could see there's a difference. The,
Yes.
the, the covered call, the gap is wider than not doing the calls on the Canadian stock. So I feel like options, writing calls on options, writing call, wow, writing call options on Canadian stocks is not exactly the best idea because you have lower volatility, so they have to write more. That's number one. Number two, I'm a data guy like you. I don't care about last month or last week, and I have to admit the Canadian banks are having an amazing run lately, right? Canadian stocks are doing really, really well lately. Why? As usual, it's always the two things, right? Gold and the
Right.
banks and the
Right.
financials, right? It's always the same thing. But if you look at the overall market in Canada versus the overall market in the US, if you start zooming, the more you zoom out, the more there's a disparity just gets bigger and bigger and bigger. Second thing for me, I'm an investor. I'm a long-term investor. I don't care about last week, last quarter, last year, next year. I care about the last 10 years, 15 years, and the next 10, 15 years. And I cannot see how the Canadian overall economy beats the US economy.
You can't compare.
I'm Canadian. I want
I know.
Canada to do well. I want to put my money in there, but like I said, it's my money.
It's
I'd
my
rather
money.
go with, plus there's not much technology there besides Shopify and Constellation.
Right.
Long and behold, Shopify is the number two stock after Royal Bank, and I wouldn't be surprised if they become number one. A technology company, go figure, right?
Yeah. Right.
I'm like you. I believe more. The best tech companies are all in the US. It's just what it is, right?
But for me,
So
it's a safety perspective, right?
for you, you
How can I
even don't.
protect my assets? And I'm going back to my portfolio that I have with my advisor of 32 different stocks, right?
Yeah,
32 versus 100 or 500 companies is far less risk, far less risk,
I'm with you.
exponentially, right?
Yeah.
So, yeah, that's
Well,
how I
listen,
do
Tim,
that.
you've been, it's almost, I think it's an hour and a half. I think I might have to separate it in two parts, but you've been a great sport. I hope people enjoyed this and they learned. And thanks so much for sharing your portfolio. Congratulations on your success retiring early. Enjoy it. You deserve it. I hope you recover well after your accident. And to my audience, if you have a similar experience to Tim, if you went all in PII and you want to share your story, it's good karma for you. You're just going to help people. That's the most rewarding part of my job by far. So email me. Let me know if you want to do this. We don't have to do it. It doesn't have to be an hour and a half. You could divulge what you want. We don't have to talk about amounts. You could share your portfolio in terms of percentages only. So reach out to me if you're interested. The audience always loves to hear these testimonials. So, Tim, any final words of wisdom you want to depart on
I got two
someone?
things for you.
Go
Number
for it.
one, if you're considering PII, if you're watching this and you're not in PII, download your statement from your advisor
Good point.
today, not tomorrow, not in a month from now, today. Download that damn thing today, see what the average is, or dividend channel drip calculator, put the date that you put your money in there, type in VU, and see what your return would have been. You can do the math. It puts it in $10,000 increments, but you can do the
Yeah,
ratio, right? That's number one. Number
yeah,
two is just a thank you to you, Adrian. Hey,
I appreciate it.
I wouldn't be retired right now if it wasn't for you. And there's a lot of other people. The other thing that I noticed, I'm super happy for you. You just announced not long ago that you got to 100,000 subscribers, and now you're at like what, 130,000 subscribers. It's getting
150,
out there.
150
150
something.
now.
Yeah.
It's
So
it's 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 building, right?
it's
Like,
building and that's just what happens with YouTube. You just don't know what could happen. So the reason why it's on kind of propagating very quickly is still because of my MSTY video. That has now become my number one most viewed video, and it's still going. I guess the algorithm, MSTR, anything on MSTR Sailor is
yeah,
very, very, very hot. So that video is just
cranking it
going,
out.
and it's all around the world. And fun fact for you, I put almost no effort doing that video. That was the day I did that video was I had a little flood in my old place I was staying at. I moved my laptop to the kitchen. So the whole background is different on that video. It's just so funny that that's the actual video. Just the video I wanted to do for fun quickly. That
That's
ends up
funny.
being the video that's getting me all these subscribers. But anyway, fun story for you.
That's like the one hit wonder, right? When you're a
One
musician.
hit wonder,
So,
and MSTR. I never had the success of that video, even though I did more MSTR missed Michael
yeah.
Saylor videos, but they all do very pretty well. Um, but
The other thing I do notice, Adriano, is I watch some other people talk about PII. And what's funny is when they bring up your video, here's Adriano interviewing, Michael Kovacs or
yeah,
Phil
I've
Kurt
done
or
that
whomever,
too. But yeah,
right? I
yeah,
think that's pretty
it's
funny. I love the fact that you get them on your channel because that's just,
I have great
information.
relationships with all of them. I really appreciate that. They obviously know the positive impact it has on their funds. So
Yeah,
I'm in the know. They'll message me and they'll email me a week or two in advance. That's another
yeah.
privilege of this job is I know basically what's going on without doing the research now. It just comes to me. That's like my second favorite thing because I'm pretty busy
Yeah.
with all this stuff. So I want to mention something, but I kind of forgot now. But listen, I really appreciate your time. And oh yeah, I was gonna say I love how now people are also their Blossom handle is like they put PII in it. There's like
Yes,
this guy Perry who has like 40K a
I
month,
see
and
that.
he
Yeah,
Perry's PII universe, and now there's Paul
yeah,
Santori, which is a really cool dude.
yeah.
I remember doing a coaching session with him a long time ago,
I
and
remember
now he
seeing
has
it.
his own thing. And my wife and I are just looking at each other. It's pretty crazy because PII, that passive income investing, we made it up. That's our thing. We're the originators of that term, and it's kind of like becoming like a
Really,
mainstream term. Yeah, it's just the name of our channel,
that's
and
hilarious.
it became shortened to PII. But now you have these people saying PII. I'm doing PII. I'm into PII. That's just the name of our channel. It's just we invented that term. So maybe we should have trademarked it, but now that I think of it, after thinking about it, I don't want to trademark that because
Yeah,
PII is for everyone. It
yeah.
doesn't, I don't feel it's a privilege for me to share the information and let it propagate. And, so it makes me feel good that people are using it and they retire early like you. They shave years off their retirement. Their worry goes from here to here, right? As you know, now like you said, it's pretty
I'm
boring,
worry
right?
free. I'm worry free.
Worry free, exactly. And I
Zero.
hear you're going to be traveling now. You're going to start traveling the world, right?
Yeah, we're gonna start traveling. Right. We sat down and I watched a retirement video. This is a funny story. I watched this retirement video and they said you need to talk to each other about where you want to be and what you want to do. And
Yeah, of
I was
course.
out for dinner with my wife and I said, "What's on your bucket list?" She goes, "Japan." And I was like, I'd never heard that before. And she goes, "No, I told you, you just don't listen." So, um, so eventually
Well,
we're going to make our way to Japan, and
go for it.
my bucket list is Asia. So not sure when, right? Do some of that. I've got a trip coming up with a friend. I'm going to go to Spain shortly with a friend of mine.
Yeah.
We were going to go on a cycling trip, but of course I can't ride a bike anymore. So he's
Yeah,
going to do that, and I'm going to do
be
my
careful,
physio,
man.
and
Be careful out there.
it'll all be good. So
All right. Well, listen, I appreciate your time, and it's good karma for you. Keep spreading the news, and honestly, enjoy your retirement.
thank you so
You've
much.
been working all those years. Enjoy. Take your wife out, buy her a nice bag, and just tell her, look, honey, it doesn't matter. We're just gonna get this much next month anyway, so who cares, right? Enjoy, and congrats again. Take care.
Thanks so much, Adriano. I appreciate everything you do. And by the
Yeah.
way, to all the others, hit the like on this video and
Yes.
subscribe. And by the way, I will say this, Adriano. Yeah, I'm a PII, what do you call them, inner circle member. But for $5 a month, I was paying that financial advisor tens of thousands of dollars,
Oh
right?
yeah.
$5 a month and I get the extra content is a no-brainer. In fact, what my wife said to me when we first started looking at this is she goes, "Well, why don't you just talk to him every month? Just schedule a call every month with him." And
I don't
I said,
think
"Well, I
you'll
can't."
need that. But to be
Yeah,
honest with you, I do have people who are a bit newer and they like to book a call every 6 months, once a year
sure.
as a checkup, just to talk.
Yeah.
They don't have time to watch all the videos, know what's going on, any new fund, so they do that, and it's a hell of a lot cheaper.
Oh,
Like it's almost a nothing compared to what you're giving up as fees that they don't even
oh
know
my.
because it's 1%. Oh, it's not so bad. It's tens of thousands of dollars.
Well, on a million, it's 563,000 over 30 years.
Yeah, I'd rather pay $500 a year, 400. It's not even that, or whatever it is,
Yeah,
$5 a month,
whatever
whatever
it
that
is.
comes out to.
Yeah,
Anyway, thanks, Tim. I really appreciate it, man. Take care.
you bet. Well, take care, Adriana.